What is good, Tesla family? It's your boy Ray J back with another video, and in this video, I'm going to be talking about the one and only Tesla stock and why I'm super bullish. I'm also going to go over some hypothetical situations and talk about how on earth interest rates going up in the upcoming years may affect the market and how this may affect Tesla's share price as well. I'm also going to answer the question, when do I see Tesla breaking past $2,000 a share? So you don't want to miss this video, guys. I have a good one for you. And before I say anything, I do have to mention the typical things. First off, I'm not a financial planner, guys. This is all for entertainment purposes only. And also, if you guys can, please smash the like button if you want to see more videos like this. And not only benefits me, but benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below in the description. If you do sign up for Moomoo, you're not only going to qualify for up to 5 free stocks, but you're also going to qualify for an iPhone 13 Pro giveaway, meaning you may win an iPhone 13 Pro by simply signing up with the link down below. So with that out of the way, let's get on with the video. So look at this right here, guys. I have the S&P 500 chart right here. It is an index with 500 of the largest companies in America, and it tends to be a very good, I would say, determiner or representative of how the market is doing, right? And as you guys can see right here, check this out right here. There were instances where we have a lot of red, but for the most part, this thing has just been going up and up and up and up, and it is yielding some very good returns over longer periods of time. But here's the thing about it. There are those instances where it tends to drop. So why on earth is it dropping? There are obviously many factors that cause it to drop, but one of the key ones is the fact that interest rates go up and they do tend to affect the market. So let's just look at this right here. As you guys can see, from 1998 up until like 2000, we were running up. Then all of a sudden, we drop from about $160, and then we dropped to about $70, right up until 2002 to 2003. So we had a correction during that time frame. Well, look at this right here. I have the federal funds rates, or the interest rates of America, the cost to borrow money, and you guys can see a very interesting correlation. Now, I'm not saying that this is the only factor, but this obviously plays a key role. Interest rates started rising from around 1998 up until about 2000, right? That's when interest rates started going up, and look at what happened as a result of that. Now, this obviously played a big role and caused the S&P to start dropping after 2000. So interest rates go up, then the market starts dropping. Look at the same thing around 2008. Once again, 2007, the market's going up. Then we hit around 2008, right? Then the market starts to crash, right? The S&P went from about 160, and then it dropped to about 100. I'm sorry, it dropped to about 67. So we had a big correction once again between 2007 and 2008. Well, look at this right here. We had interest rates going up around 2006, and then they reached their high point around 2007, right? 2007 is when we hit the high point. Well, look at this right here. Once again, 2007 is when we started seeing that correction, and then the market just collapsed for about a couple of years before we had a good recovery once again to the upside. Now let's look at this once again. We saw something very similar play out around 2018 to 2019. So obviously, this giant red candle from 2020 happened because of the COVID-19 pandemic. Obviously, that played a very big role in this happening. And we do have to note that you shouldn't be too worried because of that, okay? That did cause the market to correct, but that's not necessarily the same thing as what I'm talking about. The last time we saw a major correction that was caused by interest rates was between 2018 and 2019, guys, right? That's the last time we saw it. Well, look at this right here. What happened between 2018 and 19? We saw the federal funds rate go up and up and up, and interest rates were temporarily going up before they dropped. So, what I'm trying to say is, we know interest rates are going to go up in 2023 to 2022. They're going to start in 2022 and then reach their peak around 2023, which means by 2023, the S&P is going to start dropping just a little bit. It may be very dramatic. It may not be too bad. And it may take about a year for it to start recovering, guys, especially with this market. This market likes to be green, so I don't think it's going to be too bad. But the question is, what effect will this have on Tesla? We know the market is going to correct. Now, the thing that I think about Tesla is that, look, Tesla tends to have a positive beta stock, but I see it as a hedge to the market, believe it or not. Now, you guys are probably wondering, okay, why is the market correct? And I forgot to mention this, but when interest rates go up, if you were to invest in a bond or something, they become more enticing for institutionalized investors. They would rather have more security by buying into bonds and getting good returns than instead of investing in these stocks. So that's what's pumping a lot of money out of the market. There are other factors as well, such as fear. But for Tesla, I think that Tesla is not going to be too affected in a bad direction, guys. I think, and what I theorize is that it's going to be somewhat of a hedge to the market. I'm not saying it's not going to drop during a correction, but I am saying that it may drop a little bit, but it stop at particular levels. Once the price gets way, way too low, like at the $700 or $800 level, tons of people are going to start buying like crazy. And the thing is, my price of 7 to 800 may not even be right. It may stop dropping at like 1,000 or like 1,200 by the year 2023. It may even be way higher than that, guys. So I kind of pinpointed this in a different way for you guys. I'm using TradingView for this, and one of the ways you could look at Tesla is a Wyckoff accumulation schematic. And I think that this is exactly how Tesla is going to move during a correction. So let me show you this chart in a much more meticulous manner. Check this out right here. We ran up around 2021, then we had that big drop. You guys remember what happened in March? We had the global chip shortage and other things like that. Then we ran up, and we could basically pinpoint these moves in which we go up and down in a chart known as Wyckoff. And I know Wyckoff isn't the perfect way to look at Tesla, but it definitely has a lot of merit. And what I think is going to play out is, if there's a correction, institutions are going to dictate the price of Tesla and accumulate a lot of shares at lower prices. And this is how I think it's going to move. I'm not saying that I'm bearish for Tesla. In fact, I'm very, very bullish. I do see a lot of bullish cycles coming. So here's how I see this thing moving, okay? This is why you clicked on this video. Check this out. The market looks pretty good right now, and I see this thing perhaps running up to really high numbers. We already saw the low point right here, so it doesn't look like we're going to go back to this right here. So if I were to draw this out for the short term, okay, we have this automatic reaction. This may bring Tesla all the way up to maybe 1150, maybe even 1200, right? Then we could drop again, and I don't know how low we're going to drop. It probably won't be that bad. It may even be to like 1,000. Then we run up again, test the like 1150, maybe even 1,200 once again. Then we drop, right, a little bit. And we kind of trade a little bit sideways before we start another cycle. Now, I think these cycles may last, a couple of weeks. They may go on for a few months before we start another one once again. The next cycle may take Tesla up to like 1,500, maybe 1,600, something like that. This is just hypothetical because you guys can see the way this cycle played out, right? Let me zoom in and show you. We had a cycle that started here. Let me show you this. There was one cycle right here. Look at this right here. We have this big run up. We have the selling climax, automatic reaction, sell test in phase B, a run up, a drop, a spring, a test, and then we start another cycle. Then we run up to a high number. Then we start another cycle. Then we run up to a high number. Right here, the high number was about 1,200. Then we drop, start another cycle. Then we're going to run up again. It's kind of like a cup and handle, but let me just talk about how I think this is going to play out. These cycles may last a couple of weeks. They may last a couple of months. They may even last almost like 6 months. But what I anticipate is going to happen is we're going to keep on following this cycle over, I would say, the next year and a half or so. And this cycle will probably bring us up to about $2,000. That's kind of how I see this thing moving. We might like drop again after that. After we hit maybe 1,500, we'll run up, drop, hit another high, drop again, run up a little bit, drop, and that might bring us to $2,000. It may happen in 2022. That's a possibility. That's a more bearish scenario. I'm sorry, bullish scenario. That's very, very bullish. But it may be a little bit slower than that, right? It may take a little bit longer for us to get there. It may not happen until 2023. But the thing is, the market's going to have a correction. So this whole cycle may be extended like crazy. This whole thing may take, another year for us to get there. And I just want to prepare you for that. It may not happen until like 2023, but it depends on when the correction starts. I don't know when it's going to start exactly, but it looks more probable for 2023, which means that we could, in my opinion, still break $2,000 in 2022. Then the correction starts. It may bring us down to like I don't know, 1500, maybe lower than that. But then it may take another year for us to go through this entire cycle again before we hit all time highs again by, I would say, late 2023 again. But right now, guys, I like to be more bullish, and I still think we're going to run quite a bit, even up until early 2022 before a correction starts, making me very bullish. So my answer to that is, when will we break 2000? I don't know exactly when, but I kid you not, it's very possible that we could break it sometime in 2022, guys. It still is possible. I'm not going to put it out of the water. I'm not going to say that's impossible. I definitely think it can happen, and it seems very possible and very probable that it's going to happen next year. I know you guys might think I'm crazy, but I kid you not. This stock can move. This thing has a lot of potential. So, with that out of the way, thank you for listening. I hope you learned something from this video. I hope you learned about how a market correction probably won't hurt Tesla as bad as some people think. I still believe Tesla is a hedge to the market, and I see this thing making big moves in the future. So thank you for listening. Please have a very, very wonderful Christmas, and I'll see you in the next one. Tesla to the moon, and peace out.